Hi, everyone. Thank you for joining us today. I'm Marche, the Webinar Director at Advice Chaser. Before we introduce our guests and get started, I do need to do a bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own and, however true, funny, or interesting, are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. Well, we're thrilled to bring you this educational presentation today. Attendees are muted, but we encourage you to ask questions using the chat box, and the presenter will answer those queries during or after the webinar today as appropriate. We do have a question and answer period at the end of the presentation. If you ask a question in the chat box and we don't have a chance to get to it, go ahead and leave your phone number as well. We're happy to reach out to you after today's event to make sure that we can address that question. We want this experience to be as educational as possible, so please don't hesitate to ask for clarification or expansion of the material. So I'd love to introduce you to today's moderator. Wen Tran came to the U.S. as a 2-year-old immigrant with his family. He attended Cal Poly Pomona, majoring in finance and marketing. Wen has worked in the financial services industry since 2004. To better serve his clients, he started Wen Wealth Solutions in 2016 as an independent financial planning firm that partners up with some of the best solutions providers across multiple industries. His team covers a broad range of financial planning and helps clients take care of what's most important so they can spend more time doing the things they love. And when you can go ahead and say hello.
Excited to see everyone here today. Medicare is an important topic and it has a lot of moving parts, which can be quite confusing. So we hope everyone here today can find something of value today.
Thank you so much, Wen. I'd love to introduce you to today's presenter. Jamie Gonzalez is a Medicare specialist who's worked with over 1,000 Medicare beneficiaries. He began his journey in the insurance industry in 2003 and founded Sterling Financial by 2011. Jamie lives and works primarily in Los Angeles, but serves clients across the U.S. with multiple licenses in different states. He and his team have a passion for helping their clients obtain the best health care possible through their retirement years. And Jamie, I'm going to go ahead and go on mute, and then we're excited to see your presentation today.
Thank you so much. I'm really excited to be here. So today we're going to talk about Medicare. Medicare is a federal program that's been around since 1965. And there is a lot of moving parts to Medicare, and it can be confusing at times. But fortunately, someone like myself can help guide you and help people how to navigate this large subject. So Medicare, again, is a federal program. The people who qualify are mostly people that are turning 65. At 3 months before your 65th birthday, you can start applying for what they call Medicare Part A and Medicare Part B, and we'll go into what that means a little later. So that is typically done through the office, the Social Security office, or SSA, Social Security Administration. And the people who qualify are people, the majority, there's exceptions, but the majority of the people who are entering Medicare are 3 months away from their 65th birthday, and they have worked in the United States, not necessarily consecutively, but at least 10 years. And that could be, that doesn't have to be consecutive. In fact, they don't even have to be full years. They could be just quarters, because they count them as quarters, 40 quarters in your entire life. As long as the person has worked those 40 quarters in their lifetime before 65, and they have paid taxes, of course, they will receive Medicare at age 65. There's other cases as well. If one of the spouses for a married couple has never worked, there are those cases as well. For those type of people, they do qualify through their spouse. And of course, those are more specific subjects where we can go into detail. But generally speaking, most people work at least, to get it, you have to work at least 10 years. It's very easy to qualify. And there's also another case if the person becomes disabled. If a person is considered permanently disabled by the state, they can receive, or the federal government, they can receive Medicare early. The costs for Medicare, they vary based on income. Most people are paying around $150 a month. People that make below a certain threshold, they actually get that premium waived for low income. There's also an upper limit of about $550 for the highest income earners, and that is a sliding scale that is decided by Medicare and the Social Security Administration. There are some penalties for people that decide to enroll into Medicare late. A common example is someone who wants to work past 65 and they want to keep their health plan because they have a very good health plan at their employer, and they want to continue receiving that plan. They don't pay a premium, for example, and they want to keep that plan. That's the only exception that the Medicare allows for you to join Medicare late and not receive a penalty. If you don't have that excuse and you're not able to validate it with paperwork, the person will get a penalty for every year that the person was not enrolled into Medicare. Unfortunately, that penalty is a lifetime penalty, so it remains throughout your life, and it is a percentage of the Medicare premiums that were not paid from 65 until the age when the person got Medicare. Let's say 70, it would be 5 years of accrued penalties. Someone like myself can help the person figure out what that penalty would be. Okay. So these are the main parts of Medicare. The simplest way to look at it is you have Part A, B, C, and D. Parts A and B are provided to the beneficiary, provided to them by the Social Security Administration. The application can happen via online, in person, over the phone as well. I recommend online. I find it to be easy for most people. That can happen quickly. It can happen fast. I've seen it as fast as a week turnaround. I've seen it delayed for months. It can vary by case. Sometimes there may be a difference in name, let's say married name or maiden name, and then they ask for paperwork, and that could delay the process a little bit. But it can take anywhere from a week to several weeks, typically, for the person to receive their Medicare Part A and Part B. And it will be a red, white, and blue card that they'll usually get in the mail. And most people get both A and B. If the person has not worked enough credits or quarters, like I said before, they will only get Part A at no cost if the person is a citizen or a resident. And the Part B, it comes with that premium, which can range from 0 all the way to 500. The average cost, I would say, is around 140, 150 per month. The penalties that accrue with Part B are only if the person joins Medicare late. So if the person doesn't get Medicare when they're 65 and they don't have the excuse that waives that penalty, which is keeping employer coverage, the person, let's say they forgot or they didn't know, or now they're 68, they have 3 years that without Medicare, and they will receive a premium for, they will receive a penalty, I'm sorry, for those missed 3 years, and it will be a lifetime penalty. So there's a formula to calculate that, and it comes down to the exact amount of time that the person was not enrolled in Part B after 65. Part C and Part D are newer parts of Medicare, and they newer several decades, but they're not from the very original piece of legislation. And they are parts of Medicare that are managed by private companies. Big carriers in the U.S. like United Healthcare, Anthem, Blue Shield, many carriers, in fact, have Part C and Part D products, and this is an extension of something you add to your Part A and Part B, and you work with an agent to help you join, preferably an agent. Of course, you can go to the carrier directly, but the thing about working with the carrier directly is that you won't have the advantage of comparing your options. But if you work with a person that knows what they're doing, Part C, you can compare them, and the Part D as well. To be more specific, Part C is the managed care that the private company, the private carrier will provide, and that could be in the form of an HMO or in the form of a PPO. The Part D is your prescription coverage. And I realized I didn't mention what Part A and Part B do, but Part A is your hospital coverage, and Part B is your, what they call, it's a little confusing, but they call it medical coverage. That includes your doctors and specialists. So if you go to the hospital, you're covered by Part A. If you go to a consultation with your primary care physician, you're covered by Part B. And Part C is the network, whether it is an HMO or a PPO that's privately run. And the Part D is your prescription coverage, which is what you use when you go to the pharmacy and you refill your prescription. Another important thing to know is that there's also a penalty for Part D if you don't join it. Let's say you join only a plan that has Part C only, because there's a combination of options out there. But most of the people, they get a plan that covers Part C and Part D together. And if the person just joins a Part C, there's certain cases where you might want to do that. For veterans, for example, veterans get lifetime prescription coverage, so they get away. They don't get that penalty. But if you don't have Part D, if you refuse to join Part D, let's say the person says, "Oh, I don't take any medication. I don't want a Part D." If the person does that, the moment they do join the Part D, they will get a penalty as well, and that penalty is lifetime. It remains. It's almost like an increase on the premium that you pay when you do join. So let's say 3 years later, after your 65th birthday, the person is now 68, and they want to get that Part D. The government will assess a penalty that will be almost like an increase on their future premiums. So these are generally the options that you will have to add to your Part A and your Part B. HMOs are very popular, at least in California, and most of the states have HMOs that you can add as your Part C and Part D plan at no cost. They have zero premiums. Of course, it depends on your zip code, and the person would have to do a quote and figure out if they have a zero premium plan available. But there are those out there, and they are obviously funded by Medicare. The private companies get paid by Medicare, and that means that all you have to do is pay your Part B premium to Social Security, which usually happens in the form of a deduction from the Social Security check. And the Part C and D that comprise the HMO, they usually don't have. If you have this type of product available in your zip code or your county, you get no additional premium. So all you do is pay Part B. HMOs are also very common as a Part C and Part D option, and they typically have a premium. I've never seen a PPO with zero premium, but they obviously are for people that want to have a larger network and they don't want to see a primary care doctor in order to see their specialist. Supplements are also very popular plans, and they don't take over your Part A and your Part B benefits like the HMO and the PPO do. They are an extension, so they cover what Medicare Part A and Part B do not cover. I'll give you an example. Medicare supplements, they will pick up the difference. If a person only has Medicare Part A and Part B, which we call original Medicare, when a person only has A and B, they have to pay typically 20% of all their services at the hospital, with a doctor, diagnostics, any of those services, they have to pay 20%. So the Medicare supplement, which is a different way to do this, will pick up that 20%, and you will have 100% coverage. Obviously, there are some copays here and there, but Medicare supplements typically give you a very, very high, what we call a very rich coverage, and they're very, very common. The thing about Medicare supplements is that they don't include prescription drug coverage, and what ends up happening is you have to join a standalone Part D. So a supplement has to be combined with a Part D plan, which is prescription coverage, in order to avoid future penalties. So election periods are very important. We're coming up in a few months, October 15. AEP is the second one on the slide. AEP is the annual enrollment period when you can review your plan and you can make a change. And if it's needed, of course, you don't have to make a change, but if you need to make a change, that is a typical period of time when you can make a change. Everyone is allowed to. The reason why IEP is first on the list is because that's your initial enrollment period. That is the period when you turn 65, and you have a 7-month window. That is 3 months before your birthday, the month of your birthday, and 3 months after. Total of 7 months. You will be able to choose a plan, whether it's a Part C, Part D, supplement. You can join those during those 7 months. That is the IEP, initial enrollment period. And then the AEP happens every year in October, on October 15th. That's the first day, and it ends. It runs until December 7th. So those 2.5 months or so, you are able to make a change for the following year. So this AEP will be the election for those that want to change or make an adjustment to their plan. That will be a selection made for the 1st of January 2022, so for the year 2022. There are many, many other what we call SEPs, special election periods, and they vary based on your case. So a person that has a special situation that needs to change plans may qualify for one of those. There are everything from low income special election. There are anything also what we call chronic special election. A person that is diabetic, they can change plans in the middle of the year because they have a special chronic election period. So there are many of those. Moving to a new county also gives you an election period. If the person has lived abroad and is coming back to the U.S., that also gives you a special election. There's many of them. There's about, I think, 40 special elections, and that's the first thing we do when we're helping someone with the process, figuring out if we're not during the annual enrollment period, do we have any special elections available? So your best resources for Medicare, number one, Medicare.gov. It's so rich with resources. I find myself visiting Medicare.gov all the time. Our industry is constantly changing. We have to relearn things every year. It's a fast-paced industry for someone that does what I do. And I'm constantly going to Medicare.gov. They have amazing resources from prescription finders. It'll help you find the best plan for your case. We're actually not even allowed to use the word best plan because there's no best plan out there, but there is always an optimal plan for any given person. So so depending on the medication that the person takes, depending on their zip code, depending on many factors, you can find your best options with Medicare.gov. Also, a free consultation with a firm like Sterling Medicare Options can help you also figure out your best route. And typically, there's no charge to those consultations because the agents are paid from the side of the carriers. So that is a great option as well.
All right, folks, I'm going to go ahead. I believe we have some time for question and answer. And Wynn, I'm going to send you the questions that I've compiled that we've received so far. And please, if you have more questions, go ahead and put those in the chat. We've got a list here already, but go ahead and keep chatting those in, and I will make sure that they get addressed as we have time. And here we go, Wynn, you can go ahead and moderate those questions.
Okay, Jaime, one of the questions was, can you review again the penalties for not signing up at 65 without a valid exemption?
Yes. So the penalties for not joining Medicare on time would be for Part B and Part D. So I would have to review exactly what the formula is. I don't have it memorized because it is a little bit complicated, but they do look at the months. They look at the months that the person has been without Part B and Part D. And I know that the Part D prescription coverage penalty tends to be lower. That one is based on the national premium cost of a typical Part D plan. It's kind of a complicated formula, but I can definitely find for anyone here, if they're trying to calculate what that penalty would be, I'd be more than happy to calculate it for them. And if it's a short period of time, I don't usually see it being a high penalty. If it's a year or two, when you run into 10 years, it starts adding up. But I mean, 10 years of not having Part D, right? And the Part B tends to be the higher penalty. That one is a 10% charge on every year missed. So let's say the current premium for this particular person is 150, and they have missed, let's say, 3 years. It would be around 10% per year, per month. So that would be roughly, of course, I'd have to do the formula and figure it out. I believe around 45, if I'm not mistaken, $45 a month penalty. So that, but of course, we'd have to go in and do the exact formula.
Okay. And someone wanted to readdress the Medicare use by the military retirees. How does that work with the retired military medical coverage?
That's an excellent question. I get that all the time. So for whether it's TRICARE or VA benefits, the person with this benefit has an extra advantage. They can use Medicare in parallel with their veteran benefits. So if you already have a veteran affairs facility that you like to go, that you like to visit, you can actually also have a Medicare plan that will give you another set of hospital and doctor options. So you can use them both at the same time, and that's a great benefit, because if you want a second opinion, or there's a lot of reasons why you might want to have that, and I don't typically see that it's expensive to do that. So for a person with veteran benefits, you have the great option of having 2 health plans that work in parallel, and you can use them independently.
The only question someone had was Medicare Part A and B. If someone goes to the hospital, would the supplement cover all the out-of-pocket costs?
Yes, so there are multiple types of supplements. They go by letters. You could have a Plan F or a Plan G. And I know these terms get kind of confusing because we're talking about parts, right? Part A, B, C, D. Now we're talking about plans, F, G. And the best thing to do is to look at the benefit highlights, which can be provided by someone like myself or from the carrier directly. And these will tell you the copays for any type of service. Now, with supplements, I find there are less copays than with other types of plans, but it's important to do an analysis and see what is best for each person.
Are the Medicare premiums per person or per couple? You mentioned earlier.
It's a great question. So they are per person. The Medicare plan that you will join, or the Medicare benefits A and B, are individual. So even if you're married, you will pay that premium. Let's call it 150 roughly for the year 2021. I'd say it's the most common premium I see people paying, and that would be per person. So 2 for a couple that are turning 65 at the same time, for example.
Right, so I haven't seen this one before. I rolled in Medicare and been paying premiums since April 2021, and they've learned they have coverage through their wife's employer. What should they do? Can they cancel enrollment, or is that a possibility?
I see. So talking in general terms, I don't know the situation exactly, but let's say if the employer charges 0 premium, it might be an option. It might be an option to disenroll, but then I don't know if the person can later rejoin Medicare with no penalty because there was a break in coverage. In other words, the person went from employer coverage to Medicare, back to employer coverage, and then back to Medicare. So I'd have to read the rules about that and see if the person can. But yes, a person can disenroll from Medicare Part B if they chose. Typically, most people don't disenroll from Part A because it doesn't have a premium for most people. So you would want to keep Part A, but Part B, there is a way to disenroll if you wish. The most important thing would be to find out if you are able to rejoin Medicare without that 10% per year penalty I mentioned earlier.
And along those lines, for having an exemption for having a company health care, does that also apply for Part D for the penalties to be able to avoid that too?
Yes, it does, but it has to be very specific. There is a minimum allowable coverage that Medicare requires, and if we can prove, I'm sure there's a way to get that from the employer's human resources office. If the person has a minimum allowable prescription coverage that has to be similar or better than Medicare Part D. So you can't have an inferior prescription coverage to what Medicare offers. And if it is below that threshold, the person will pay a penalty. And if not, we can make a case and they will not charge a penalty.
And this is, I think, these next 2 questions being those similar lines. They're full-time with benefits, turning 65 next year, and someone who plans to retire at 70, and they both have great health insurance. Would they be able to get the waivers? And I guess the other case, what parameters should they look at to say, I should sign up at 65 based on that plan versus going with their employer plan?
The first parameter I would look at is premium. I see maybe in the most grandfathered plans, you will see 0 premium employer health plans, but lately I haven't seen those in more recent retirees. Oftentimes they are paying a premium at their employer, whether it's a reduced or pretty low premium. There's still a premium there. So I think the number one thing I would look at is, can I get something comparable in the Medicare market for a lower premium? And if the answer is no, I'm currently getting a very good deal with my current employer, and it's better than any Medicare plan out there in terms of premium with the given benefits, you might want to hold off and wait until you decide to drop that employer coverage. So I'd say the first parameter would be the premium. And the second parameter would be, are we comparing apples to apples? Are you comparing it to a product that is a Medicare product that is equal in terms of benefits, whether it is carrier, plan type? You want to make sure and that you're comparing 2 plans that are the same and figuring out the premium. Obviously, you also want to have a guarantee that you won't get a penalty. And if it's an employer plan, there shouldn't be one as long as you get a letter when you do leave the employer plan. Social Security will request that in order to waive that penalty.
Okay. And to follow up on that, what kind of proof or paperwork do you need to send in to avoid that?
Excellent question. Typically, the Human Resources Office or whoever acts as the Human Resources contact in the company will be the best place. Typically, they don't really know how to join Medicare. I see a lot of people going to their human resources and they don't really know how to advise the person, but they will know how to give proof of your last day of coverage. So let's say your plan ends this month on the 31st of July, and you will be without coverage on the first day of August. Then that letter that states this will be enough proof.
Okay. Back to the military one. Does military coverage provide any of the Part A through D coverage, or do they need to get that separately?
So there's a lot of different types of veteran benefits that I've seen, and they can be slightly complicated. It's important to look at the case-by-case situation. What I do see very often is that prescription coverage is fully covered for life from what I've seen. So oftentimes the veteran Part D plan or the veteran prescription coverage is equal or better to Medicare, and you don't have to have another Part D on top of that. In terms of supplements, I believe I've seen a supplement from a military person, from a former military person, a veteran. But there's case by case. There's so many branches of the government, and they run things a little differently. So it's important to see the case. But the one point that I have seen almost always is that the prescription coverage is covered for life, and there's no need to get an additional prescription coverage.
Okay. And to continue that Part D question, can you have the companies as the primary and Medicare as a secondary?
So Medicare has to be primary. The way to do that, if the person has joined the Part B plan, the Part B already, I would probably look to drop it. If you're 100% sure that joining Part B later on will not create penalties. But Medicare has to be primary. There are some people that have both Medicare and Medicaid, and in that case, that's a low income, a person that is considered low income by the state. Every state has their own rules. So in that case, just to make an example, Medicare always has to be the primary, and the secondary is the Medicaid program.
And it can continue that. After you leave an employer, say you're over 65, how soon do you have to sign up for Medicare benefits?
So typically what I've seen is you get about 2 months. As I said earlier, there are these windows, these periods called special election periods, and leaving employer coverage is one of the common ones. So from what I remember right now, it is, I believe, 2 months. I know for COVID we had a special election period, and also for wildfires, and there's rules are constantly changing. So for wildfires for California. So it's important to look at I believe it's about 2 months. 2 months after the employer plan has been dropped.
Okay. Are outpatient procedures or visits such as therapies covered by Part B, or are there other DME coverages?
DME? Do you mean durable medical equipment? DME? Okay. So there are some therapy coverages with Part B and Part A, but in order to get them fully covered or get the most extensive coverage, the best way would be to join a supplement or to join an HMO or a PPO, Medicare, that is, Medicare PPO, Medicare HMO. And that will definitely provide the full range of DME coverage, which is durable medical equipment. That includes wheelchairs, that includes anything that's like a hard type of device. and there are some very affordable options out there. So I would start looking for the premiums that are in the person's budget and fine. But there are many affordable options out there that have very good, extremely good benefits.
And to follow up on that, DME is which plan?
So DME is a type of benefit. So let's say a person needs a wheelchair. That is a coverage that is provided by all the Medicare plans, whether it's the Medicare HMO, Medicare PPO, and Medicare Supplement. They all cover durable medical equipment. The only difference between, let's say, an HMO and a PPO would be that to get a DME, which is a durable medical equipment, let's call it crutches, something simple like that. With an HMO, you'd have to get your primary care doctor to write you that order. And with the PPO, it's a little easier because you can bypass the primary care doctor.
Okay. I think this is our comment. For the military, it is TRICARE for life, and doctors are seen through the military hospital clinics.
Say that last part.
Doctors are seen through the military hospital clinics only.
If the person has Medicare, they can go to their Medicare network as well as their
Okay.
as well as their veteran. So like if the person if they have a VA cardiologist and they want to get a second opinion from their, let's call it their private network, their private, let's say Blue Shield, just to make an example, health plan, they can go to a cardiologist in their Blue Shield network.
Okay.
As well as for a second opinion if they wish.
Yeah, you mentioned earlier that Medicare looks at the premium based on your income. Does it look at married couples' income or just the individuals who's going to retire and be on Social Security?
Yeah, so it is. There is a chart on Medicare.gov. What I can happily send that link over, and it'll show ranges of income, and also if the person is single or married. And there are different premiums based on if you file single or as a joint.
Okay. And I guess a follow-up on the DME, A, B, or C part, or is this just the, you talked about the supplement? Which part is that for the DME?
DME. So DME, I know there's so many letters and it gets confusing a little bit. So DME is, think of it just as just another benefit. For example, labs. So you have a lab benefit, which is basically if you wanna do diagnostics at your Quest lab or any other lab, there is a benefit. It could be 0 per lab, or it could be 20 per lab, depending on the plan, right? Copay, let's say, for example. So DME is just simply one of those lines in your benefits that you will get from your health plan. So you can get DME from all of those options that we reviewed. DME is considered something very critical for most people and that use them, of course. It could be oxygen, it could be CPAP machines, it could be wheelchair, crutches, anything that comes from a DME supplier that is covered with all these plans. All these plans cover it. The only difference might be some plans might have a 0, let's say 0 copay. Others might have a 10% copay or 20% copay. That's what you're going to compare. They all cover DME. It's just you just have to see what level of coverage the plan you're looking at gives you.
Okay. And I guess we had several questions on this. Can you review the differences between Medicaid and Medicare?
Absolutely. That's a very common question. It's very natural. They sound the same. So a person that has Medicare and Medicaid, because in California they brand it differently. So Medicare and Medicaid, a person can have both or just one. Medicare, the easiest way to compare them is just remember that Medicare is age-based. It's more based on retirement, and Medicaid is based on income. So those work independently. The person can have Medicaid but no Medicare, but they can also have Medicare but no Medicaid. And the person has both. We call them dual eligibles. That is the terminology. And so that's probably the easiest way to look at it. The other aspect to it is that Medicare is a federal program and Medicaid is a state program. So even though Medicare will be the same regardless of what state you live in, Medicaid coverage is going to be different because it is state run.
Okay. And to follow up on that dual eligibility enrollees, are they eligible to also keep their third-party Medicare, like Empire Medicare Blue, or they have to enroll into a Medicaid managed plan?
That's an excellent question. So the carriers are required to, for those carriers that want to have plans that are available for dual eligibles, people that have both, it's typically best to join a plan. You could be with the same carrier. You could be with, let's say, carrier ABC. ABC will have a Medicare only plan, persons that don't qualify for low income, or a dual plan. So if the person has Medicare, for example, and they enter into a situation where they need Medicaid and they join Medicaid, I would recommend going into the dual plan that your carrier has. A lot of carriers have them, not all, but most of them do. And you can just join, and that plan, what it will do, it will coordinate your Medicare benefits and your Medicaid benefits so they can work seamlessly. And that is what you want. You don't want them working independently. You do want them working under one roof if possible.
Okay. And to follow up on that, is SSI Medicare or Medicaid?
SSI is a separate program, and it is more of a financial, has a more financial element than a health plan element.
I will break in here. We have done some webinars about SSI and SSDI, and you can look at advicechaser.com for some more information about that. I know that's not Jamie's particular specialty.
No.
I think we have time for about one or two more questions, Wynn.
Okay. Should you apply for both Medicare and Medicaid if you're eligible?
Yes, absolutely. If you qualify, even if you think you might be on the border, I would enroll. I would apply. Be mindful that Medicaid application will ask a lot of financial questions. It's about more pages actually, and they will ask about assets and all that because they're looking for resources and they're looking for income in order to qualify. So I know there are some people uncomfortable with filling all that information. It could be sometimes a little personal, but if the person feels they're close to in that range, they should definitely qualify. They're going to get two coverages at once because they're going to become a dual eligible.
And I think it was, and can you send a chart on that eligibility for Medicaid? All right, so we'll follow up with that person.
Yes,
afterwards.
and that one is a more complex situation because it's state by state, so it depends on the state we're talking about.
Yeah, and I think this will be the last question. Does Medicare cover long-term care?
So there are elements of, it depends what exactly. Housing is not covered by Medicare, but we'd have to look at the benefits, but if we're looking at what we all typically understand by long-term care, the answer is no. They don't cover long-term care.
Okay.
All right. I think even though people might still have questions, we are going to go ahead and wrap this up. So if you have a question and we haven't had a chance to get to it, go ahead and leave your phone number in the chat so that we can have someone reach out to you. This has been such a great webinar. Thank you, Jamie. Thank you, Wynn, so much for moderating. I want to say maybe this wins for the most comments ever in a chat.
It was my pleasure. I love this subject. I'm very happy to be here.
We're really excited. We had so much participation from our audience. So on behalf of Advice Chaser, I want to thank the organizations that have worked with us to bring you this webinar today. Thank you so much for attending. Look for an email soon with a link to a replay of this event. You're welcome to share that replay with your friends and family. Here at Advice Chaser, we're all about helping you find a financial advisor who's a great fit for you and your life and your financial questions. Our matching service is free to you, and every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. So find out more by going to advicechaser.com and clicking on the link to find an advisor. Once again, from Advice Chaser, thank you so much for coming, and we hope to see you at another webinar soon. Thank you very much, everyone. Bye-bye.
Thank you.
Thank you.